Hey guys, Frank Minetti, Branch Manager, Advisors Mortgage Group, Freehold. Glad to be here with you. You know, the sky's falling. That's what I kept hearing, right? These last months, from January or December of 2021, the sky's falling. What am I talking about? Interest rates, right? Everybody's so concerned with interest rates. And look, we're not saying it's not real, it's real. But what I wanted to specifically talk about today is refinancing your home can still be alive and well for you. And we need to take a look at it. So again, you can click the link in my bio if you want to do a one-on-one about what I'm talking about today. I'd love to do that with you and walk through your numbers. Because guess what happens? The math never lies, right? The math always tells the truth. But what am I talking about? Well, let's take a look at a real world situation. Let's say you have a $300,000 mortgage and you have that at 3%. Real, right, based on where we saw rates over these last few years. But let's say this, and I'm giving a simple scenario here. Let's say you've accumulated $75,000 worth of credit card debt. Maybe you were like out of work for a long period of time due to COVID. Whatever the reason, you've accumulated $75,000 worth of credit card debt. So if we took a minimum, let's say 2% of that credit card balance is due each month. Cards range differently. They can be as low as 1. Some credit cards are as high as 4. Interest rates vary depending on what your credit's like. I know some people that are paying north of 24% on their credit cards, right? And what is that doing for you? Nothing. If you're making that minimum monthly payment, and this is what I always get. Well, but Frank, here's what I'm doing. If I refinance, that's going to be over, let's say, a 30-year period of time. Sure. If you make your minimum monthly credit card debt, it's going to take you 30 years to pay off that credit card. If you're not adding anything additional to your principal balance, especially if you're at like 24%, and they're real. There's real credit cards out there. We know that the Federal Reserve has increased lending rates, right? The overnight lending rate by a lot, 2+% in this year alone, as recently as last month, which was July, 0.75% again, and that trickles down to things like credit cards. So let's say you got $75,000 in credit card debt, you're paying 2% on that credit card debt. If we take that, you take your $300,000 mortgage at 3%, we refinance it into $375,000. And before you guys ask, I know what you're going to say, well, there's closing costs involved. Yes, there are. They can be rolled into the loan, but a good news of what people don't realize with closing costs is, let's say you pay as part of your monthly mortgage payment, your property taxes, and your insurance. Well, guess what happens? We pay off your existing lender, you get a check back from them for the unused portion of your property taxes and insurance that they're not going to need to use. Then what else happens? You skip 1 month's mortgage payment. So both those things go into eating into closing costs, okay? So we take a $300,000 mortgage, we roll in the credit card debt, $375,000. Again, I'm doing a simple number here. What does that save you each month in cash flow? $636, assuming that $375,000 mortgage is at 5.5%. Okay, right around real world numbers today. Look, the mortgage interest rates fluctuate daily, sometimes multiple times throughout a day, but the reality is refinance can be very much alive. Now you've also taken and added to tax benefits of that debt that you don't have if you keep your credit cards alive. And here's what I'm telling you too. Don't close those credit cards after we pay them off. Lock them in a safe. Don't cut them up. Don't use them, but keep them open, because guess what that does? Now we wiped out all your debt. You've got all this credit available to you. You don't use it, and your credit score skyrockets. So click the link in my bio. Let's talk one-on-one. Maybe there's more to this, right? Maybe there's more. Maybe there's car loans you want to involve, student loans. Maybe there's 401k loans. Let's put the math to work. The math always tells the truth, and then you can make an educated decision based on our conversation. If you have a financial services professional out there, we'll include them in this as well. Anybody you want to be involved in exploring these numbers, we're happy to bring them into the conversation. So again, this is Frank Minetti, Branch Manager, Advisors Mortgage, Freehold. Give us a shout, click the link in the bio, and we want to talk to you and get rid of your debt.